Hello students, how are you? Today we are going to take a question from your book in which we will study uh, how to adjust old partners capital account according to their profit sharing ratio and on the basis of the new partner how the capital of the old partners are adjusted. Okay, let us start the question on your screen. Okay, thank you. A and B were partners sharing profits in 3:1. They admitted C as a partner for 1/4 share in the future profit. C was to bring 60,000 for his capital. The balance sheet of A and B as at 1st April 2018, the date on which C was admitted was, the balance sheet is given here, liability side, capital account of A and B 50,000, 80,000, total 1,30,000, general reserve 10,000, creditors 70,000, total of liability side is 2,10,000. Then come to the asset side, land and building 40,000, plant and machinery 70,000, stock 30,000, debtors 35,000, provisions for doubtful debts 1,000, net debtors are 34,000, investment 26,000 and cash is 10,000. The other terms agreed upon were goodwill of the firm was valued at 24,000, land and building was valued at 65,000 and plant and machinery at 60,000. Here we see that land and building value 60,000, 65,000, which is increased in the old balance sheet 40,000 was there. It is increased by 25,000. Plant and machinery 70,000 in old balance sheet given. 60,000 is the we have revalued, means value has gone down by 10,000. Provision for doubtful debts were found in excess by 400. So this is means excess provision has been done by 400 rupees. So we will reduce this thing. Debtors will increase by 400 rupees. So in revaluation account we will show it on the credit side of revaluation account 400. Liability of 1,200 included in sundry creditors are now not likely to arise. It means creditors are reduced by 1,200. The revaluation account debit side it will be shown. In the credit side it will be shown because liabilities are reduced. Then capitals of the partner be adjusted on the basis of C's contribution of capital of the firm. According to the C's capital, old partner's capital will be adjusted. Then excess or shortfall, if any, be transferred to current account. In their current account it should be adjusted. And prepare revaluation account, partner's capital account and balance sheet. We won't make the balance sheet because you know how to make the balance sheet. And remaining capital account we will prepare and revaluation account. Okay, thank you. Let us try the question. Students, now we are solving this question. Here it is. To save our time, I have already done this on the whiteboard, and then I will explain you. Okay, this was C was admitted for 1/4 share, and he brings 60,000 as his capital, and the amount of premium, it is not given here, but goodwill is shown here. So we went. Okay, so 60,000 capital he is bringing and some amount of premium of his share because he is getting 1/4 share. Here, capital account in the balance sheet, when we see that capital account balances are given here, this is 50,000, 80,000 we have taken it here. Then general reserve is given. When no other information regarding that is there, then it is to be distributed among partners in their old profit sharing ratio. So general reserve is distributed in old partners profit sharing ratio was 3:1. So it is divided in old partner 3:1. Okay, 3 shares, 1 share. Then on the asset side, then creditors are there. Then on the asset side, there is no such thing that should be distributed among partners, that should be charged from the partners here. No P&L account and some expenses, nominal assets we can say. So here goodwill of the firm was valued 24,000. When 24,000 goodwill is there, okay, so he is coming for 1/4 share. 1/4 share, 24,000 divided by 4, then comes 4 6 24. So 6,000 goodwill, share of goodwill he will bring. So premium of goodwill here, premium of goodwill 6,000, which will be distributed among partners in their sacrificing ratio. And here when we have already studied, then when new partners profit sharing ratio is given in the question and no other information is there how much he is getting from which partner, and old partners profit sharing ratio is given, and new partners share is given that how much he is getting, then old partners sacrificing ratio is the same which is their profit sharing, old profit sharing ratio, though that is 3:1, and old profit sharing ratio was 3:1, that is the sacrificing ratio also. So here that premium of goodwill, this is goodwill, will be, this is goodwill is 6,000 will be distributed in 3:1, 1 and 3, okay, this is done. Then comes the land and building was valued 65,000. So 65,000, so what was the value of building? 40,000 in the balance sheet. So balance sheet 40,000, now it has been increased to 65, means 25,000 increased. Revaluation account, land and building account debit to revaluation account. Then in plant and machinery 60,000. 60,000, 70,000 is shown in the old balance sheet. Now 60,000 is the value, matlab value has gone down. So here the revaluation account here to plant and machinery 10,000. Okay. Then comes provision for doubtful debts was found in excess by 400. 400 excess doubtful this provision was done. It means now we'll reduce this. So debtors will increase with that. Debtors will increase by 400. So provision for doubtful debts, revaluation, this provision for doubtful debts to revaluation 400 rupees. Okay. Then comes liability of 1,200 included in sundry credit not likely to arise. 1,200 liability of creditors is not going to arise. This means liability is going down. So liability when goes down, so this is 1,200 unclaimed liability or creditors we can say. Okay, sundry creditors. The capital of the partners be adjusted on the basis of C's contribution of capital. Okay, now and excess shortfall transferred to current account. So now all that now we will find out related to revaluation account. Now no transaction is there. So we will take the balance that comes 16,600. That will be distributed among partner A and B in ratio. In which ratio? It will be distributed in ratio 3:1. So 3:1 when it is distributed, A's share comes 12,450 and B share is 4,150. Now this will be transferred to the capital account here. 12,450 here, this revaluation account, and 4,150 in B's capital account, credit side. Now we'll take the balance here. If we add the A's capital account and this side, credit side, it comes 74,450. And here no debit any item is there which reduce its capital. So the same is the balance of his capital account, 74,450. Same like that B's capital account, this credit side total is 88,150 and no debit item is there here in his capital account. The same is his capital account balance, 88,150. And now the balance of C's C is coming to the business, is bringing 60,000, so his capital account is 60,000. This is the amount of balance of their capital without any adjustment in the capital till now. But it says that the partner's capital account will be adjusted as per the capital of the new partner. So the capital of the new partner is 60,000, as we know. 60,000 is the capital of the new partner. And now 60,000 when his share is there, so we will find out how much should be the capital of old partners. He is getting 1/4 share. When he is getting for 1/4 share, he is bringing 60,000 rupees. 60,000 rupees he is bringing for 60,000 he is bringing for 1/4 shares. So total share will be 4/1, means it is 2,40,000. Should be the total capital of the firm. After that he is bringing how much? He himself is bringing 60,000. 60,000 his capital. Now remaining, how much capital remains? That remains 1,80,000. If we deduct 60,000 out of 2,40,000, then remains 1,80,000. So these two partners' capital should be 1,80,000. 1,80,000. This 1,80,000 should be the capital of A and B. Okay, this is there. But now we will find out, this is the total capital. So this capital will be distributed in their profit sharing ratio, that how much should be the capital of each partner. So we find out in what ratio they are distributing the profit. They are distributing the profit in the ratio of 3:1. In future also, in between them the profit sharing ratio will be 3:1. So 3:1. So it means out of 4 share, A will get 3 shares. Now if we, how much his capital should be? If we divide this 180 with 4, 4 4s are 16, and this 2 remains, then 4 5s are 20, and then 45,000 into 3. It means 3 5s are 15, 3 4s are 12. 1,35,000 should be the capital of 1,35,000. So here I will write A's capital should be 1,35,000, and B's capital should be this 45,000, and our total is 1,80,000. And C's capital is 60,000 already. 60 plus 180, 2,40,000, that we had already calculated. That if he is bringing for 1/4 share 60,000, the total capital should be 60,000 into 4, 2,40,000. That is there. Okay. Now we'll take the balance. Now this is done. Now in the question says that whatever this shortfall or excess is there, that should be adjusted in current account of the partners. So now current account, it will be transferred to their current account. Now the capital account, we see A's balance should.
Hello students, how are you?
How much he is having?
Today we are taking one more question.
He has to bring this some amount,
and we shall solve them. Then here I am reading the question that is on your screen.
Or we can do it here also. Okay.
Question number 66 it is.
Is the easier way.
A, B and C are the partners sharing profits in the profit and losses in the ratio of 3:1 respectively. Their balance sheet as at 31st March 2018 is as follows. First of all, liability side we will study that.
150.
Number 1, capital. A's capital is 60,000, B's capital is 60,000 again, and C's capital is 40,000. Total is 1,60,000.
Balance should be 1,35,000.
Then creditors 30,000, bills payable
35,000. How much
10,000.
money he
Total
has to
of
bring?
the liability
So here
side is 2 lakh.
P will be
On
debited.
the asset side, land and building 50,000, plant and machinery
How
40,000,
much?
fixtures
B will be
30,000,
debited.
stock
B's
20,000,
capital account will be debited.
and then debtors
Valuation
30,000,
account, 0.
bills receivable 20,000, and
Bill of
bank
exchange of
10,000.
4,000, which was
And
previously
total of asset side
discounted
is
to the
also
banker
2
was
lakh.
dishonored.
Then
31st March 2018, but no entry has been passed for that.
Cash.
Admitted as a
what
new
happens?
partner on 1st April
Now
2018.
bank will
for
be
equal
credited
share
and
and is to
debtor
pay
will
50,000 as
be
capital.
debited. So here debtors account debit to
Following are the adjustments
bank
required on D's
account.
admission.
This entry will take place.
Out of the
Debtors
creditors,
will
a sum of 10,000
increase
is
and
due
bank
to
account
D,
will be decreased with
which
that.
will be transferred
Then
to his
comes
capital
then a
account.
provision of
How much should be
doubtful
Here we see
debts
that
is to be created 5%. So 5% we will
this out of the creditors a sum of 10,000
make the
means
arrangement.
he was a
For that,
creditor of the business.
what is the journal
10,000
entry?
business had to pay him.
This
Now that
provision
10,000
for
will go
doubtful
to
debts
his
DR2.
capital account.
B's current
So what would be the journal entry for that?
Revaluation account and
Creditors
expenses of revaluation
account
account
debit to
2,100 is paid by A.
This
A's account will be
D's
credited
capital
and
account.
revaluation account will be
But we
debited here.
And advertisement expense of 1,200 are to
Prepare
be
necessary
carried
ledger
forward
account and balance sheet
to the
after
next
these
accounting
admissions.
period as
So
prepaid expenses.
let
This
us solve the question now.
advertisement expenses of 1,200 is not related to this year. As a result, profit should increase with that.
43,000.
So revaluation, we will this
will be transferred to his.
with that what would be the journal entry? We will put it in revaluation
After
account.
this, when we find
So
this
prepaid
is 88,000
this advertisement expenses
and this is 60,000.
debit to
Okay.
revaluation
And
account we'll put.
Here, no. Two balance.
Expenses debited to
How much
P&L
balance is
account
there now?
include a sum of 2,000 paid for B's
Yeah.
personal expense.
Balance carried down. How much is the balance now? The balance is 1,35,000. And so here 1,35,000 is the balance. Here 88,150. Okay. So how much is the balance now? Is 45,000 balance is there. C's capital account 60,000, his balance is 60,000. So this is the balance of their capital. Okay. This way we can adjust the capital. This is the numerical we have done from your book. Okay. Now, okay, you can solve other questions like this. The further this 81 is there. Okay. Thank you.